Drop a like and do share. Leave your comments and do not forget to subscribe for more videos.
Hello everyone and thank you for watching Edupedia World videos. In this session, we'll deliberate on the topic branches of accounting. That's what are the various and different branches of the subject of accounting. These are the various and some of the important branches of the subject of accounting. That's financial accounting, cost accounting, management accounting, inflation accounting, human resource accounting, social responsibility accounting, hotel accounting, and finally forensic accounting. Though this does not make up the complete list of the different branches of accounting, however, these are the various important branches of the subject of accounting, and we'll try to understand them one by one. Firstly, the financial accounting. Financial accounting is concerned with the process of recording, that's journalizing the business transactions in the primary book, which we term as journal. And once we have recorded the transactions in the journal, we subsequently classify them and post them to the ledger, that we term as book of final entry. That's why we term is that science and art of recording and classifying business transaction. And after the transactions have been recorded and posted to the ledger, an organized summary of these transactions is prepared, which takes the form of the financial statements, which primarily include profit and loss account and balance sheet. That's what we mean by preparing these summaries in the form of financial statements. And finally, once we are done with the preparation of financial statements, the same needs to be communicated and presented in a specific format and design as prescribed by the concerned agencies, typically under the Schedule 3 of the Companies Act 2013, in case of the companies, to the interested users or the parties, which we have discussed in detail. These interested users require this information for taking various important decisions. So, overall, financial accounting typically starts with the record keeping in the books of primary and the final entry, then preparing the summaries of the same, and finally communicating the information to the interested users, which we have deliberated in the previous session in a more detailed fashion. Now, after this is the cost accounting. Now, before we proceed further to understand what cost accounting is, we need to know the term cost. Cost is the sacrifice of the resource to achieve or acquire more desired resource. For example, we incur cost on manufacturing a particular article like pen. Our objective is to achieve more desired resource, which is profit. Now, after having understood the concept of cost, we may proceed to understand what cost accounting is all about. Cost accounting is a subject which is concerned with the four statements that you can see on the screen, starting with ascertainment or the determination of the cost. Here we try to determine the amount of cost incurred in manufacturing a particular product or delivering of service. That's what is the total amount of cost in manufacturing a particular product or delivery of a service. Once we have determined the total amount, the next step is the classification of the cost. Classification means that once we have determined the cost on the product or delivery of service, we must ascertain the nature of each cost. Since cost of a product cannot be of one nature, so there must be different costs involved, which is typically concerned with the classification of the costs. For example, we may have direct or indirect costs. Direct costs are the costs which are directly identifiable with the product. For example, in manufacturing a pen, we require raw material like plastic or steel. This plastic or steel item is directly identifiable with the product. Also, indirect cost is the cost which is not directly identifiable with the product, like using of grease in the machine which manufactures that product to keep it in good condition. This lubricating the machine, this grease cannot be directly identified with the product. So this is indirect cost. Also, we may have fixed or variable costs. Fixed costs are the costs which do not vary with the level of production. They remain same irrespective of the level of production. If we produce 10,000 units of a product, for example, we may have same amount of fixed cost. If we produce zero amount of a particular product, we still have to incur those fixed costs. Example could be depreciation of a machinery, salary of a staff who are attached with the machinery or in the manufacturing process. If we do not manufacture, we still have to incur those costs. Now the variable costs are the costs which directly vary with the level of production. The more production we have, the more variable costs we have. The less production we have, the less variable costs we have. That's why it varies with the level of production. After we are done with the classification and determining the nature of different costs, the next step is the apportionment or the distribution of costs. That is to allocate the costs to the different cost centers and activities to which they are related. And finally, the subject of cost accounting is concerned with the employing of various specialized techniques and procedures to control the costs or to keep them under manageable limits or within the boundaries which have been already established. But if there is any deviation from the set benchmark, then it calls for taking appropriate or corrective measures to set them right. Now, in nutshell, we can define cost accounting as the subject or as the process of ascertainment or determination of the cost, subsequently classifying the costs, then distributing or allocating the cost, and finally controlling the costs using different techniques. Next, we have management accounting. It is that branch of accounting subject which is concerned with the redesigning, reorienting, reshaping, and remapping the accounting information. Again, it is that branch of accounting subject which is concerned with the redesigning, reorienting, reshaping, and remapping the accounting information as provided by the financial and cost accounting subjects in such a way which will help and facilitate the management to take decisions at various levels, that is strategic level, tactical or middle level, and executory or supervisory level. Now, to redesign or reorient or reshape accounting information is typically what we call as analysis and interpretation of the accounting information contained in the firm's financial statement. This can be done by using various techniques which includes comparative analysis, that is, we compare the financial performance and the financial position of a business concern with the previous results of a particular year with the previous. Suppose if we are in the year 2016, we want to compare the results of the 2016, we will compare them with the previous results like 2015, 14, 13, like that. This is what we term as comparative analysis. Next, common size analysis. Here we take a specific variable and we relate all other variables of that statement to that variable and try to determine the differences. If the differences are important, we take measures to either, if they are positive differences, we try to enhance them, we try to maximize them. If they are negative, we try to identify the various causes and try to set them right. Another technique is the ratio analysis, which we have already in a very little fashion deliberated upon in the previous session. That's it identifies various aspects to determine the performance and the ability of a firm to generate revenues. Then we have trend analysis. That's what has been a trend of the firm over the years. Then we have the cash flow analysis. Now this is very important. Cash flow analysis tries to determine the inflows and outflows of the cash and the reasons thereto. Balance sheet tells us about the financial position of a firm on a particular date. It shows the assets, it shows the liabilities, it shows the amount of capital on a particular date. But it doesn't tell us how much this capital has been acquired. It doesn't tell us if the cash has decreased compared to the previous year, what are the reasons for the decrease in cash. To know that, we have a separate technique called cash flow analysis, which tries to determine and ascertain the inflows of the cash into the organization and outflows of the cash out of the organization and the causes and the factors that lead to that inflow and outflow. And in that, it categorizes various activities into three sets, that is, operating activities, financing activities, and finally, the investing activities. Next, we have the fund flow analysis. It also is one of the important techniques to determine the inflow and outflow of the funds. Typically, by fund, we mean working capital or net current assets. Then we have the cost analysis. To do the cost analysis, we have various techniques like marginal costing, standard costing, differential costing, activity based costing, and all these techniques. Overall, management accounting is a subject which uses the information provided by the financial accounting and cost accounting and subsequently redesigns them, reorients that information, reshapes that information in such a way, in such a manner, in such a fashion which will facilitate, which will help the management to take decisions in the organization. The next one, the another branch of accounting is the inflation accounting. Since we know financial statements are prepared with a view of presenting the financial position of the business on a particular date and displaying the results achieved during an accounting period. These statements are prepared on the basis of the historical cost. That's on the assumption that the value of the money remains the same. But this assumption is wrong and is invalid as the purchasing power of money changes from time to time, upward or downward in terms of price level. The system which recognizes the fact that the purchasing power of money is decreasing day by day during inflation and finds out profit or loss or states financial position of the business on the basis of the current prices that are prevailing in the economy is what we term as inflation accounting. So, inflation accounting is an accounting for changing prices, as you can see on the screen. Or inflation accounting is a system of accounting which regularly records all items in financial statements at their current values that are prevailing in the economy. It doesn't take into account the historical costs. Rather, it takes into account the values that are prevailing outside in the economy. Next one is the human resource accounting. We know that human resources are considered as important assets and are different from the physical assets. Physical assets do not have feelings and emotions, whereas human assets or the humans are subject to various types of feelings and emotions. In the same way, unlike physical assets, human assets never get depreciated because there is a chance or they continuously try to enhance their abilities, enhance their performances, enhance their intellectual abilities. So that's the reason that they do not get depreciated, rather they get appreciated. There's an institute called the American Association of Accountants. They define the human resource accounting as it is the process of identifying and measuring data about human resources and communicating this information to interested parties. We have another definition that has been given by Stephen Knopf. He defines human resource accounting as the measurement and quantification of human organizational inputs such as recruiting, training, experience, and commitment. In a nutshell, we can say and we may conclude that human resource accounting may be defined as accounting for people as an organizational resource. It involves measuring the costs incurred by organizations to recruit, to select, to hire, to train, and to develop human assets. It also involves measuring the economic value of people to the organization. So, all this is done separately as there is no provision in the historical accounting subject to account for human resources. That's why this branch of accounting has come into existence. And the next branch of the accounting subject is the social responsibility accounting. We can understand this subject of accounting in a following manner. That's it is the process of identifying, measuring and communicating the social effects of business decisions to interested groups in society or society at large to permit informed judgments and decisions by the users of information. It's known by various names like social accounting and auditing, social accountability, social and environmental accounting, corporate and reporting, corporate social responsibility reporting, non financial reporting or accounting. These are the various names that are alternatively used to refer to social responsibility accounting. Now, there is a thing, one important thing that social accounting challenges conventional accounting. Social accounting challenges conventional accounting in a sense, this statement needs to be understood properly. It challenges conventional accounting as it is said, but in particular financial accounting in a sense as financial accounting gives narrow image of the interaction between society and organizations and thus artificially constraining the subject of accounting. This branch of accounting overcomes this limitation and gives detailed information about the firm's actions and behavior on the overall economy. Whatever the business does and how and what are the various effects that it has on the society at large. To know that, to check that, to determine that, to measure that, we have a separate branch of accounting called social responsibility accounting. As in it, management of the firm is held responsible for what it contributes to the social well being and progress. Another branch of accounting is hotel accounting. It's that part of accounting practice which is used in hospitality industry. Unlike conventional corporate accounting where one set of financial statement is used, in hotel accounting financial reports are made from various departments before consolidated statements are made for the entire hotel. So we may call it accounting, hotel accounting is part of accounting practice in hospitality industry. The main financial statements are no different from other accounting reports like balance sheet, profit and loss account, and statement of cash flows. Now we have another important branch, that is forensic accounting. It is recent development in the area of accounting. Forensic accounting utilizes accounting, auditing, and investigative skills to conduct an examination into a company's financial statements. For what purpose? To investigate the frauds committed, to investigate the embezzlements that have taken place in any business organization. Thus, forensic accounting provides an accounting analysis, an interpretation, causal relationship, which is suitable for the courts to take the decisions, to investigate the matters, to prosecute the particular entity or the persons who may have committed frauds or embezzlement or have committed embezzlements. So forensic accountants are trained to look beyond the numbers and deal with the business reality of a situation. That is all what we have in this session. That's different branches of accounting. We end this session here and we thank you for watching Edupedia World videos.